This morning we have Neil Beveridge, Senior Analyst at Sanford Bernstein Co, joining us on the program. Good to see you, Neil. Good Monday morning to you.
Good morning,
What
Susan.
about this profit increase in the first half for Sinopec? Surprised the market.
Yeah, I mean, the results were slightly higher than anticipated. Remember, refining volumes were very, very strong in the first half of the year, as were petrochemical volumes. But of course, what we saw was higher crude prices, a much weaker growth in prices at the pump, which compressed refining margins. So net income increased by 6%, but of course that was much lower than Cnooc, which saw a 100% increase in net in the first half.
Oh yeah, you can't really compete with Cnooc, can you? When you're a refiner in China, as I mentioned, you are capped at the pump. So what do you think about Sinopec's, I guess, efforts to try to diversify right now and less on refining, rely less on refining?
Well, that's right. Their oil business in China is very mature. So Sinopec are looking at ways where they can grow production. I think the problem they face in China is they're really sandwiched between Cnooc, which dominate the offshore, and PetroChina that dominate the onshore part of the business. So they're looking at offshore international projects. We've seen the parent company looking at injecting Angolan assets. But remember, Sinopec are paying full dollar for that. So in terms of returns, we don't see that as particularly value accretive for shareholders.
Okay, but that's interesting because we're looking at, what, Sinopec trading at 636 and change or so, but you have a pretty good price target on Sinopec. You know, if investors get in here, they can make some serious money.
Yeah, I still think there's upside going forward. While, you know, I think there's going to be headwinds in the second half of the year as we see a slowing of the Chinese economy, I think going into next year, we see higher crude prices coming through on the back of stronger demand growth from emerging markets and weakening of global supply.
That's right. And now let's talk about PetroChina, because we're going to get those results later on this week. As you mentioned, Cnooc already doing pretty well. In fact, you're looking at, what, 44% increase, 73%, pardon me, for PetroChina, or is that for Cnooc?
It's about a 44% increase for PetroChina.
Yeah, which is pretty significant, 44% first half earnings, right?
Well, remember, while PetroChina also has a substantial refining business, it's just a much, much bigger upstream company. So it's going to benefit a lot more from the higher commodity prices in the first half of the year relative to Sinopec, which is much more overweight refining. Okay,
so yeah, that's the difference between upstream and downstream, right? Okay, so for PetroChina, what are we looking at? Are there more gains for this stock, for this share, than, say, for a refiner like Sinopec?
That's right. Well, I think going forward, I think the big thing with PetroChina is still its gas business and oil business, and particularly we're looking at further price reforms within the gas industry. Remember, gas prices were increased by 25% by the government this year, and I think going forward into next year, we expect to see more gas prices increases coming through. Okay, so PetroChina price target, what are you looking at here? We're looking at around $12.50 as a 12-month price target.
That's pretty big from here. Well, how much upside is that from here? We're looking at I think it's trading $8.67 and change right now.
That's
so
right.
$12, $4.
So we're looking at about 25% upside over 12 months.
Oh my
yeah,
goodness!
Right.
Wow. Okay. Well, now you're more bullish, most bullish on Cnooc. Why is that?
That's right. Well, I mean, Cnooc really doesn't have any refining business in China, so it doesn't have any of the regulated businesses that PetroChina and Sinopec have, and it really is enjoying very, very strong production growth, and I think it's going to benefit a lot from higher commodity prices as we go into next year.
Now, I haven't heard you talk about China's economic growth, because a lot of people are seeing slowing right now.
That's
that
right.
might impact these oil companies.
That's right. Well, if you look at what Sinopec are saying, they're looking at refining throughput and refined fuel sales basically being flat on the second half relative to the first half. So effectively, we're going to see a cooling of the Chinese economy as we go into the second half of the year, which is going to result in slower volume growth for refined fuel sales and also for petrochemical sales. Okay, Neil, thanks for stopping by on this Monday. Nice to see you. That's Neil Beveridge of Sanford and Bernstein.